Our content is intended to be used and must be used for informational purposes only. It is very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise. What's up, my future one percenters? This is Marathon Money, brought to you by Wincrease.com. I'm Cam Jones, Prince of the Stock Market, and I'm with the homie Kenny Coins. What up?
It's been good. You know, last quarter, our pocket's full.
Pocket's full. Paid in full,
gotta
man.
be.
Paid in full. So what's up with the market this week, man?
It ended, like I say, it ended on a good note. I personally think the Dow should be at 27,000. I personally think the S&P should be at 2,900, and you know the NDX, the Nasdaq is doing its thing like it always do. I think the NDX Nasdaq is cruising along just right. I personally think the NDX, the Nasdaq, is going to be the future of what we should be exampling, what index we should have been investing in.
Yeah, because that's
Nasdaq
all the tech
came
stuff.
a long way.
That's all the tech stuff. You know what I'm saying?
You know what
Everything's
I mean?
being automated now anyway. So
Yeah, but the Nasdaq, I give Nasdaq credit. It came a long way. Just in 2014, it was at 3,000.
that's a big come up.
3,700.
That's a big come up.
That is a bit. You know what I mean? That's like 4 years now.
I would call it 4.5.
4.5 years now. Yeah, that's a huge come up. People got to see it. And I feel like Nasdaq maybe in 2-3 years will be over 10,000. I think a lot of people are because all the Nasdaq stocks are technology stocks.
Yeah.
So I think people should take aware of that. It would have been a good thing to buy when it was at 1,000 in 2008.
I mean, everything. You could almost buy anything in 2008. You could have bought Sears. Could you have bought Sears in 2008 and what came up? Well, obviously not now. They bankrupt. But if you would have bought Sears in like 2008, you could have made some money if depending on when you sold, I think.
Nah, Sears, yeah, you could have made some serious money if you bought it in 08.
Yeah, and you would have had to time it just right, to sell it.
Man, Sears got that Q at the end. Yo. Yeah, I just looked at it. Sears got Q at the end of that thing. It's over.
When you get the Q, it's over.
You understand? Once you get that fifth letter, that's like the death symbol, man. When you get that fifth letter, it's
oh my gosh, they got
it's a wrap for you.
SHLDQ.
Yeah.
74 cents.
In 2008, it was $17, and the highest it ever went was 75. And after that, that was the end of it, and that was only for 2 years, and that was the wrap of Sears.
Now they got the Q.
Now they got the Q, 74 cents.
The Q. You never want the Q. You never want the Q.
The option put on this would have been wild.
Yes. I remember when, I forgot when it was, 2011, 2012. I was talking to Extra about Radio Shack. I was like, man, I think Radio Shack was like $7. I was like, man, I need to get some puts on this. And then I think maybe like a year and a half later, they were gone. I was like, man. And then the same thing with GameStop. GameStop was at like 40. I was talking about what I should have done. Didn't do it. I ended up getting puts late, still making some money. But that would have been a huge run if I would have got the puts at 40 and got rid of them at like 20, 18, something like that. It would have been excellent.
I found out if you're already locked in, for example, if you got put at 12 and it's at like 70 cents, you can't put puts anymore. You can't do any option play after $5.
I think you
Once it
can
drop
you can still do options under $5.
below like I know it's a certain. I know if it's $5, but I know it's below a certain number where they don't let you do options anymore. And I know once it gets to like 50, 60 cents, if you still in there, you in there.
Right.
You know what I mean? But
There's
man,
so many that I called the OJ murder on, man. It was American Apparel, GameStop, Sears, Radio Shack. BlackBerry ain't dead yet, but I still got the
I
hit
don't
out.
even know how they still out here.
I got the
They
hit
should have
out
been
on
gone since
BlackBerry.
2001.
Yeah, I don't know. I do not know who's using it. I know you tell me that the Canadians, their government forcing them to use it.
Our
I think
government is using it. That's one
man,
thing.
our government ain't using no BlackBerries. You serious?
That's serious. They're using it, man.
Oh my gosh.
One of the comments says, I think it still can go higher.
BlackBerry?
Yeah. No, but I honestly, BlackBerry is one of those companies that's really confused me why it's still here. But it must be doing something right because it's been at $10 for 2 years.
Yeah,
We've been talking about this for 2 years. Been at $10 for 2 years, so they're holding steady.
You could get that. If there's an option play, Extra always talks about where if the stock doesn't move, you can make money. It's not the butterfly, it's something else, I think. But you can get options on it where if the stock only stays in like a certain range.
I know what he's talking about. I want to say no, it's a butterfly.
Okay, it might be a butterfly, but
yeah,
you find.
He got those weird little names.
Yeah.
It might be a butterfly. I don't know. I hear him say it all the time. I know the vertical and the other patterns and stuff, but like when I first heard the butterfly, it was from him.
When I first heard the butterfly, it was a dance.
But I know it works because I've seen him do it 10,000 times. So
yeah, I mean, there's a ton of options.
I know it works.
That work out here.
But yeah, man. I feel like maybe because we're stuck in the earnings seasons, Dow, S&P, Nasdaq maybe not passing resistance right now, but earnings season come around and things start shaking and start moving.
Yeah, I mean the Dow and the Nasdaq and the S&P, I feel like they all right there at that resistance level, and they can push through. I feel like they got the power to push through. So, hey, be ready. But also be ready man. You gotta stay ready for anything. Anything can happen at any time.
You gotta stay ready. You gotta stay aggressive. You gotta have that little cash in your portfolio.
Gotta have
like little liquidity.
Gotta have that cash.
Boom. So let's get oh man.
So, yo, you ready for the new picks?
New picks.
It's Marathon Money earnings season. Yo, real quick, man. Do you think we should have a live podcast one time?
Man.
Like do a Google Hangout and let anybody who want to join in. They can ask questions or whatever. You think we should do it?
Definitely.
Hit us up if y'all want us to do that, man. We got to figure out how we would do it. But hit us up, marathonmoney3@gmail.com. Send us Facebook message in our chat. However you get a hold of us. Let us know what you think. Would it be video?
Yeah, I think so.
It would be video.
I think so. I think that would be a great idea.
That'd be pretty cool. But okay. You ready for these picks?
Yep.
These new picks? Okay, so what's up first? Which one we gonna hold up. First, we're gonna let them know what we kept in our portfolio from last time. We kept Pfizer, we kept Take-Two, and we kept Glue. Those are the ones that we kept. And how we're going to do it, how we're going to manage the amount of money we make or lose. What's today's date, man? The 31st. So we're going to go off of the closing price on the 29th. So the first new stock that we got, Facebook. Let's just do Facebook real quick. So Obviously, we like Facebook. It closed at $166.69. So that's the price, the closing price on March 29th. That's what we're going off of. So let's just start off with that. Facebook. Me, we were talking about this, Kenny. They got a nice gap below and above. Now, if you know anything about gaps, most of the time,
they're not good.
Yeah. Well, they get filled. The gaps get filled.
They do get filled, man.
Now
they do get filled. They're just worrisome when you're in it and it's a gap down.
Right, but there's a gap below and above. Now the gap below is at 150. The gap above is at $210.
Yeah.
Now I personally think this is going up. Now if you go by the if you go by the theory of gaps get filled and it goes up, where's it going up to?
220.
Exactly. Gaps get filled. So there's some money to be made here. Now, I'm not saying that, this is a slam dunk guarantee because there is a small gap below. But the upside potential outweighs the downside.
Downside potential, yeah.
So we got to have Facebook on this thing, man. What you thinking about, Kenny?
I personally think so. 166 to 215, 210.
Right.
That's money right there.
That's money.
You got to throw Facebook on that for the second quarter.
Marathon money. Earnings season. We need like a little sound effect for earnings season.
We do.
Real quick about Facebook, then we're going to move on. You think the government going to take them over?
If they do, there's going to be a shot up to 300.
You think it's going up if the government take them over? I think if the government take them over, they're going down.
Here's the truth, man. No matter what people say, the government already been taken over. We're gonna act like they don't already have Facebook. We okay with it, man.
You know what? You got a little point. I don't want to turn this into the conspiracy episode, but no, you got a point. You got a point.
We okay with it, man. And the reason why we okay with it, because Facebook has become a priority in our lives.
They saying Facebook swung the election, on $200,000. That can win you an election. I can come up with $200K so I can be president.
It's not. Here's the thing. I don't think Facebook won Donald Trump the election. I think the way he used the tools that Facebook gave him won him the election.
No, they're saying that the Russians put $200,000 in social media ads up, and that gave him the election.
Man, we just looking for excuses. I just think because Donald Trump barely spent any money running that election.
Right.
It's proven over and over time again how much money he spent. He spent literally 30 times less than Hillary Clinton. Simple as that. Donald Trump used Twitter, Facebook, Instagram, and used those tools so well to the point where he used little to no money at all to win the election. Now, we can say the Russian helped him, but $200,000, that's petty change.
That's nothing. That ain't nothing.
That's $2 to the Russians. You know what I mean?
That's $2 to within the whole election money.
Yeah, exactly. Compared to the grand scheme of everything. So I just think the way they use those tools, that's what I'm saying. Like Hillary Clinton, she's still thinking in the 1980s, 1990s. She's not thinking in today's time. Donald Trump, as much people might not like him, as much people might hate him or the things he say, we got to give what credit's due. He's a visionary. He can find people to find the things that needs to be done right. That is just factual.
What I mean? I feel you right there, man.
You know what I mean? He goes out his way to learn how to use social media. He goes out his way, even though he's 76 years old, whatever, how many years old he is, whatever. I know he's in his 70s, but he goes out his way to find those things and learn about them. You know what I mean?
Yeah, I think that's enough politic
No,
for
that's
the
no. I'm just saying that you gotta give credit where credit's
yeah,
due.
I
But
feel you. But let's this is about the marathon money earning season, man. People
I'm
love
telling you,
making
bro,
that money.
Facebook's gonna go up, and it's gonna go up regardless of
Who
who
owns it?
takes over,
I got
who
you.
buys it. It doesn't matter. Facebook's going up.
Okay, so we moving on to our next pick. Um, MTBC. Now, if you were in our Facebook chat, you know this has been I'm not gonna call it an all star, but it's been solid. It's had
Yeah,
a little roller coaster ride, but if you got in when we were first talking about it, I mean we weren't talking about it on this podcast, but when we were first talking about it, like in our chat, you made a couple bucks on this.
it's
Um,
been an underdog.
it can't get out of that. I feel like it can't get out of that $5 range, but I think it has potential to break through it. I think that they're basically a medical billing company, which they're software as a service. So people subscribe to their service, and then they make medical billing easier on hospitals, doctors, whatever. Obviously the business model works because that's the same business model everyone's using. Apple, Netflix,
Yeah, just I think the truth is it's just a little bit harder, and I think the process is a little bit longer on this because getting doctors and hospitals to send their medical bills to another company, it's just by subscription, maybe a little bit tough. So to get you have to understand, there's still a lot of doctors out there that's between the age of 40 and 75 years old.
So old cats.
So they got the way of doing things is still in the 80s and 90s, and
But
you gotta understand that.
you say that, right?
Yeah.
That's a big potential for explosion for them. Right now, let's look at their market cap because this is how we found a couple other all stars like Teladoc, Square, and them, right? MTBC market cap 52 million. That's nothing. And now you just said that most of these doctors are older, which are, we all know. I mean, we ain't ageist here or whatever ist you want to put on it, but we all know older people are reluctant to get into new technology. Now, as younger doctors and things like that come up, they're looking for easier ways to do it, looking for things to integrate with their devices, things like that. They might look to MTBC for this service. Now that's a couple years away. On earnings season, we doing things in 3-month increments, but I'm just letting you know what I'm saying, this is how this business operates. I feel like they're undervalued, but you do have to watch them when they get closer to $6. You know what I'm saying? What percentage move is that right now? I'm not a mathematician, but I'm going to take a wild guess that is going to be somewhere around 25 or 30% move. If it gets up closer to $6, that's going to be a nice profit that you could take right there. What you think, Kenny?
I personally think that you're 100% correct. I think a lot of people don't know that MTBC is out there, and slowly the word will get out when maybe younger doctors come in, they start their own practice. They're looking for easier ways to do it instead of having somebody sit down and physically be on the phone with somebody and do each billing. But it takes time. These things take time. Also, also human nature plays into the part of, do I really want to keep using technology for every aspect of my business? And that's the key.
Of course you do. Of course you do. You want to
use
anything that's going to save you money.
The older generation that has the money don't see it that way.
Oh, I feel you.
That's what I'm trying to say. So,
all right. So, we moving on to the next up is DocuSign. Now, I like DocuSign. They are a company that I'm pretty sure everyone's used them before. You sign things online. They have a lot of deals with a lot of corporations. Right now, the 8.8 billion market cap. I don't really feel like they are undervalued. I just feel like they're priced fairly, but they are at support right now. Support is around $50 as of this podcast. they are sitting at 51.84. So they're sitting at support. I think there's some upside. If I'm looking at the indicators, everything it's looking like it's oversold a little bit. Oversold at support. Good product. I like it. What'd you think, Kenny?
We had a disclaimer on this stock too.
Disclaimer. I was gonna let you throw that out because you alerted me to the disclaimer. So we're gonna throw the
You know what I mean?
disclaimer out.
Some stocks you have to put that disclaimer on it.
Yeah, I feel you.
You know what I mean?
The
We
dis-
have a disclaimer. It falls below $47. It's a wrap. We selling out.
I would
Just
say
because
48. I would say 48.
I'm agree. You keep it tight.
Keep it tight.
Keep it tight.
Keep it tight.
You know what I mean? But if it drops, if it goes to 48, we are selling. Just because just the way the daily chart looks and the weekly chart looks, there is hitting that support level. It is oversold, but you never know. It could stay oversold for a while.
Yeah.
So we want to make sure we have a stop loss or a number that we want to watch out for. But personally, think like I'm with Cam. I think if it can break the 59.60 resistance, I think there's a great chance we'll start seeing 65 and 70. That's really the next resistance. So let's hope a 59 and 60 get broken, and then we're on our way. I personally think it does. DocuSign is a very big company. I think they're very well priced, and they're oversold with $8 billion market cap. I think they're right there. I don't know. A lot of companies nowadays are using DocuSign. So
yeah. It's another one of those things where, like you just mentioned about MTBC, technology is just taking over. You know what I'm saying?
Yeah.
And I think I'm not for sure, but I think they do have a patent on that. So that's why.
Yeah. You said it was 20 years.
I think people like Adobe, they're a buyout candidate. People like Adobe might want them in their portfolio to use in Acrobat. Well, I think you can already do things like that in Acrobat. Not the same though. DocuSign has something else different about it. But
man, I have used DocuSign, and I'm gonna tell you right now, I'm pretty impressed by it. Here's why: because I don't know if you ever signed a lease, or signed like a document, and like a large file document. All you have to do is just keep pressing the thing and just keep signing your name.
Yeah.
See, like most things, you don't have to do that. You have to physically sign your name.
Even though it might
That's
what Acrobat, you could just physically sign it, but you can't automate it.
You can't automate it, and I think that's the patent they have.
I know I used them when I bought my house. I used DocuSign. I was just basically sign once, and you just copying and pasting it in there, I guess.
Yeah, that's what it really is.
So that's cool.
But remember, disclaimer at $48.
Disclaimer. Next one we got is COTY. Now, they paying a good dividend at, I think it's like 4.48%. We call it 4.5% dividend, which is pretty good. They're sitting here. It looks like they possibly have a little comeback in their system. They were down to about, the low was 591. They back up to 1150. Good dividend. I see some support here at around $11. They sitting at $11.50. I think there's some money to be made, and if anything happens, you do have a little dividend that you can depend on. About 4.5%. That's nothing to sneeze at. That's a good dividend. So, that's the next one up. What you think, Kenny?
I personally think they're, just by looking at the chart, take away the dividend. By looking at the chart, you can see they have the potential of reaching $16. You just gotta sit here and wait and see how things play out.
I like it when the stocks are below, like the 200-day, 20-day, 50-day. I mean, I don't like it, but I like to see that they came back and rose above those levels. You know what I'm saying? That just shows,
because it's showing improvement.
Yeah, exactly. And that trend most likely will continue. So, but like you said, we thinking around 15, $16. Once again, I'm not a mathematician, but that's somewhere around 50%. We're gonna be around there if it gets up to that level. So, marathon money earning season. What can I say?
Yep. Let's get it.
Let's get it, man. Okay. Up next, we have Fun, F-U-N, Cedar Fair. So if you don't know about Fun, they basically run a bunch of like amusement parks, entertainment places, things like that. I got a funny story I want to share about Fun, man. In 2008, my dad, was it 2008, 2007? Can't remember. But my dad came to me and he was like, hey, man, you need to buy Fun, Cedar Fair. And I just basically laughed at him, like, man, why would I buy that? At the time, everything was tanking around that time also. I think it was around like $7 or $8. And I just basically laughed at my dad. I came back and looked at Fun about a year ago. And I went to my dad, I was like, man, I should have listened to you when you told me to buy Fun. Like, man, you know what kind of move this is from $7? Like, my dad literally told me to buy it, and it was like $7, $8.
Oh, man, that's ugly.
That move, that means let's just call it every $8, I would have gained 100% of my money. And right now, I'm sitting at 52.62. That's like a 400% move. I'm like, dang. And it had got as high as 67.85 if you want to go back to June last year. You know what I'm saying?
Yeah.
Dang. My bad, Dad.
Well, you should. Oh, remember that story you was telling me last week? Your CEO. Oh, you was telling me you were talking to him
about Berkshire Hathaway in the 80s.
Well, yeah.
Crazy.
That was a crazy story.
Crazy.
But I personally think Fun is a solid stock. You know what I mean? Definitely with summer coming up, spring, people are gonna start heading out to the fairs and different parks.
They do a little more than that also, but they own like Cedar Point, Six Flags, stuff like that.
Of course. And the commercials gonna start coming out for those. So people won't start. People won't start going there.
They got good support right here at $52, and like you said, we got good support at 52. The season for this stock is coming up,
and it got 6.96 dividend.
I forgot about the dividend. That's a good dividend. That's almost 7%. That's one. I might. Dang. So I lost out on the dividend and this move. You serious?
Yep.
Man, my dad disappointed in me, man. I can't believe it. He more disappointed in me than that one time. I ain't even gonna mention that. So we got so we got Fun on there. I think, that's all the moves we got.
Man, that's really it.
That's all the moves, man. So I'm just gonna ask you about another stock. We're not gonna put it on here, but Home Depot, Lowe's. How do you like these people? Like the
man, that's that extra stock.
Yeah, extra like Home Depot. Home Depot sitting good. Support is at about 190.
Man,
soft
you know
support.
what I was pissed about?
Mad about.
Home Depot was at like 120 last year. I think so. I don't remember.
Yeah, they were under 100. They were under 100 sometime last year.
Yeah, I was looking at them, right? And I was like, man, I really should take some money, even if it's like just $500, $600, and just buy some shares.
Didn't do it.
Did I do it? Nope.
That's like me with Cedar Fair.
Did I do it? Nope.
Man, it's all good. We all had those little blunders, man, all the time.
You know what I mean? Because you're looking at it and you're just like, man, I just can't see Home Depot going any higher.
I feel like I can speak for myself. I always talk myself out of buying something good. You know what I'm saying? I see the signs, but somehow I'll just talk myself out of it, and I don't do it, and I end up missing the move. But I think that happens to everybody though.
You know what I mean? And I do that, man. I do talk myself out of some stuff, man.
But it's all good though,
And
because
it is. It's all good. It's all good.
there's so many moves out here. There's so many moves to be made. That's why.
Because I remember Extra was talking about it since 2016. He's been going off about Home Depot and buying options and riding it. You know what I mean? I think personally, man, Home Depot is. I remember people used to tell me stories how their parents would buy Home Depot and just sit on it and sit on it, and the dividend is 2.87%.
That's not that great, but I mean it's a dividend. I mean it's been moving, so dividend don't matter. The stock's been moving for you.
It's just, you know what I mean. Home Depot, it's been around a long time.
Every time I think about Home Depot, though, I think about this story when I had someone come and do some work at my house, right? And when I came home, man, my toilet seat was down. So he used my he took a dump in my bathroom without telling me, right? And so what I did was I went out to Home Depot, and if you know anything about me, man, the bathroom, that's like my sacred place, man. You don't mess with my bathroom. I don't even like people using my bathroom. I'm the only one who's supposed to use my bathroom. And so I go out, buy me a new toilet seat. I went to Home Depot, bought the toilet seat. But that's every time I think about Home Depot, I think about when I had to go buy me a new toilet seat. I went to Home Depot. I didn't trust nobody else with my toilet seat but Home Depot.
Dude, and Home Depot got the perfect name too. You know what I mean? I really think a lot of these big time stores and big time retail companies, it's really a lot of it has to do with the name. You know, Amazon had a different name before it was Amazon. It was like some weird name. Amazon would have never been that great then if it had that weird name. You know what I mean? But I'm just saying, man, because like when you got appliances, man, you think of a screwdriver, I ain't thinking about Lowe's. I'm thinking about Home Depot. So
Well,
like,
if you think
that's
about
like a in-house name.
Or if you think
You know
about
what
a
I mean?
toilet seat, you think about Home Depot.
Depot, you know what I mean? You think about paint, you think about Home Depot. You ain't thinking about anybody else. You ain't gonna go no Ace Hardware.
Yeah, Ace Hardware seemed like I'm about to just build something from scratch. You know, like
It just Home Depot seems like it builds it for you.
Yeah, exactly.
You know, so you know, there's a reason why Home Depot's worth $211 billion. But I personally think Home Depot is a great company. I think, honestly, I'm going to be honest with you, Home Depot is constantly innovating, constantly moving with the times. You know what I mean? If you want to make your whole house a smart house,
go to Home Depot. Go to Home
Depot. You know what I mean? You want to build a little sandbox in the back?
Home Depot.
You know what I'm saying? You want to get yourself a little rental pool? Home Depot.
HD.
I mean, HD, exactly. You want some lights on top of your house? Home Depot. You want to build a shed? Home Depot. They got you, and they'll even come out and help you build it. It's just, you know, it's you can't fault it, man. Home Depot. I think when whoever didn't buy the stocks in the 80s and the 90s, you're missing out. Because Home Depot has consistently. You gotta give it. It's been around when Sears was around, J.C. Penney's, and all those companies been around, and they're thriving like they're Apple.
Yeah.
You know what I mean? And to tell you the truth, I just personally think they kept up with the times. You know what I mean? They kept up with everything. They took the advantage of technology to move themselves forward. They're a great company. You know what I mean? I just think I ain't paying $200 for them, but
right. So
catch them under 80 again. Oh, I got them.
So man, that's the Marathon Money earnings season picks. Make sure you follow us on Spotify, Marathon Money. Make sure you support this podcast by clicking on the support link on the website, and you can also Cash App Marathon Money anything helps to support the podcast. Marathon Money, that's all one word. Hashtag Marathon Money. You can follow me on Twitter, Facebook, Instagram, StockTwits, anything at Camboni11, CAMBONI11. Let's get this money, man. Where you at, Kenny?
Man, I wanna say one more thing.
Go ahead.
I want everybody to look up Rich Uncles.
Rich Uncles. I forgot, man. We gonna do a whole podcast about Rich Uncles though. But tell them about Rich Uncles.
Like, I just want people to look it up, man. Go. I'm just gonna give you a quick tip. Go to how it works. I think this is the perfect opportunity for people who is just trying to build a second stream income. It gives you your money every 25 to 30 days of dividends. It's literally something you can do with it. I'm talking about $1, $2, $5 that you can recurrently put in every month and see something coming back to you. It's gonna be relatively small. It's gonna be 20 cents, but
I mean, 5 or 7, 6, 7%, whatever they're paying is 6, 7%.
Yeah, I just want everybody. I'm not gonna go any further into it, but Rich Uncles, that's what it's called. I think it's a hidden gem. I was reading, and I ended up stumbling upon it. I'm gonna tell you right now. I put $5 in, 25 days. I got like 20 cents. You know what I mean? It's truly one of those companies that I think a lot of people who are making just 30, 40, 20K a year can find another small revenue stream, you know what I mean, that they can build slowly and I know see something coming out of it.
I know people out there, they probably laugh, you said, yo, 20 cents, but if you laugh at getting 6, 7%, man, don't even listen to this podcast.
You know what I mean? I read an article, it said this exact wording. Stop looking at the amount of money, the number you're saving, and start looking at the percentage you're saving.
Yeah.
You know what I mean? Because, if you say, for example, you was making 30K a year and you were saving 3% of that, and the next year you go to making 40K a year, you need to still save 3%, not just save $2,000.
Right, exactly.
You know what I mean?
Yep.
You need to save 3%. It's the same concept because it's that's where I used to get so confused. It's like, okay, I'm making 60 grand, I'm still gonna save $2,000. No. You still take that percentage out of that because that is that's part of the snowball effect.
That's what I mean. That's a whole nother podcast, man.
It is. It's a whole nother podcast. It's something that people got to completely understand because you want to live below your means, period. And just like Cam said, if you just see only 20 cents, then there's really no helping you.
Yeah, exactly. There ain't no helping.
Really none,
there
ain't
man. No helping you.
Yeah, the whole goal is like, okay, say you only put 5 and you get 20 cents. Next month, for example, you put 15. Now, you're going to get 15. You're going to get 7% off of 15. You know what I mean? 2 years from now, you got like 7, 8 G's.
Exactly.
You know what I mean?
Exactly.
It's a whole different story. It's a snowball effect.
That's why
you got to see the percentage.
That's why we call marathon money, man. It's a marathon. It's a marathon.
You know what I mean? It is. There's no risk. There's no get rich quick scheme over here. It's impossible, man. You know what I mean?
Well, if you bought like a ton of options on GameStop up, so some puts, you could have got rich quick. You know what I'm saying?
Even that takes some time, man.
Yeah, it would.
Even that takes some time, but still, man.
Yeah, I feel you.
So, hit me up, KennyCon23. That's Instagram, Facebook. You know what I mean?
Anything.
Definitely hit us up on the message. Support us. Hit the support link. Cash App us if you can. That's a major support. We're trying to grow. But hey, invite all your friends. Share this.
Leave some reviews. Leave reviews on iTunes, man.
You know what I mean? And follow us on Spotify.
Yeah.
We trying to get 100,000 followers on Spotify.
That's
what we're trying to do.
All right, man.
But
you good?
Yup. Marathon money.
Peace.
Peace.